Welcome to thestockmentor.com. I'm your stock mentor, Brian Johnson, and we had a down day again today, second red day in a row. Wow. But certainly not convincing in any way, shape, or form for the Bears as of yet. And we're looking at the 60-minute on the Dow. You can see that one of the levels we watched to get up and over was the 10,700 level, which was an area to maybe take a little bit of a long position for you intraday traders. And we did get a couple of decent days of some run up, but now we haven't even come back to retest really 10,700. We got a couple of wicks down here, but right now we're still holding above 10,700. So from a daily, you can see there's just nothing to be concerned about. Look at this overhead level that we broke very decisively on Monday. And as for Tuesday, Wednesday, there's nothing going on here. So the Bulls are very, very, very much still in control. Breaks up and over 10,800, take us right to 10,900. That'll be a good trade if and when it does break that area. I'll watch that closely tomorrow, see if there's any kind of economic news that gives us the move to the upside. But this is absolutely what I would be watching if I were looking for some day trades over the next couple of days. For you swing traders, those of you that like to hold a little bit longer, a day, 2 days, 2 weeks, whatever it might be, you want to wait for breaks back below this 10,700-ish level. That might give us a little bit more of a pullback and at least give us a couple of days to play things to the short side. Very difficult in here to take any trade at this point, right at this 10,700-ish level. Very difficult to take a trade and stick with it overnight. Anything can happen. Big gap up tomorrow. Wouldn't surprise me in the least bit up to that 10,900 level on the Dow. Best way to beat this lower support would be to gap down below it. The markets love to do those type of things. So let's see which scenario plays out for us in the morning. But breaks below 10,700 and breaks above 10,800 are your areas for trades. Nasdaq on a 60 finally broke the blue line today. Wow. After a run up since the beginning of September, we finally get one small break of a trend line back into the 1980 mark, but you can see really nothing to certainly be worried about if you're bullish on the current market here. This is just a pullback right now. There's no selling interest at this point. It's going to take something pretty drastic, I think, to start hitting some stops and bringing back the selling action into the markets themselves. But as it stands right now, this is just a pullback, which is what I mentioned in my videos. Have to view any kind of a move to the downside as just a pullback. This is absolutely textbook pullback at this point. So back up and above 2,000 are your entries to start looking for longs back in the NASDAQ area. You can see from a weekly holding very well above this overhead, what was resistance is now probably going to end up being pretty good support on a retest. That'll be the big line to watch if and when we get back down to 1900. So let's watch and see. That could happen tomorrow. It could happen 3 weeks from now. Very, very hard to tell. But right now, there's no selling interest at all coming into the markets. I think the bulls are still pretty comfortable with where they're at. From an SPX view, breaks below 1125. That's where I'd be really looking for potential shorting opportunities if you want to do any kind of short at this point. Bulls, I think, are going to be looking at these as opportunities to buy back into the market. So it's going to take a great volume of bears to convince the bulls otherwise. And we've had 2 days of moving downwards, and we've gone really nowhere. Tapped the 1150 mark up here down to 1135. So, the 13, 14 points in the last couple days is certainly not anything that would make me extremely bearish on the markets whatsoever. Daily perspective too, look, we're just going to come back down and retest this 1130-ish area. I would expect that if, we'll probably test that tomorrow sometime. We haven't quite already. But if we see some sort of a little gap down in the morning, just a smaller gap down in the morning of 2-3 points, that would make very good sense to me. Then watch very closely to see if this 1130, 1131 area holds on any type of move to the downside. It's just textbook pullback at this point. From a weekly, got a couple days left. You can see it maybe wants to try to retest this area, but we'll see if this doesn't put in maybe some sort of a gravestone doji by the end of the week. Let's see if there's any kind of selling interest that comes in at all over the next couple days. The only thing that's really going to move it or make the markets move is maybe some sort of news. I'm not a big news guy, but That's what they'll use to launch whatever comes next. The next move up or the next move down will be attributed to some kind of news that comes out, whether it's good whatever, good or bad whatever, it doesn't really make a difference. Just follow the charts, guys. Just follow the charts. VIX on a daily was up ever so slightly. It wanted to come back, and it did retest these overhead areas of resistance, all of these moving averages converging all at the same place, all at the same time. So this should give us a lot of very strong overhead resistance. As it stands right now, though, I said, and I'll say it again, there's still something very difficult to read within the VIX itself. It does not want to break this line. No matter what the market does, the VIX is just continuing to hold itself at a particular level, but that really means nothing to us right now. The bigger areas will be breaks of this 26. We get up and over this blue line. Now maybe we start to see a flood of fear come back into the markets, but as it is right now, all this VIX is doing is hovering in the middle of this area. It's every bit as likely that the VIX will drop down to this lower blue line as it is that it'll spike up to the upper blue line. There really is no other direction in the markets right now. Weekly, same thing, just a lot of sideways motion. Apple is a monster, still up at 287. Those of you that took that trade over 280, yeah, you're welcome. I called a lot of different entry points on the way up. If you've been following along, you had to have made money. Stop being a contrarian. I've been really, for the most part, nothing but bullish on Apple since this all started. Just cautiously bullish as we got up into these upper levels. No question I've been cautiously bullish, but still bullish. Look at this monster. Apple's so strong. There's just no stopping the juggernaut when it gets going. And here you see it again. Watch this for other good intraday trades. Anybody that took it up and over 278 and or 280, you're making very good money on this trade. Stick with it. Same thing here on a weekly. There's no reason to think this thing's going to see any kind of major drop before this is all over with. I wouldn't even be surprised if Apple maybe saw another week of upwards push. Markets have to kind of move with it, though, and help it along. Otherwise, any kind of move up in Apple will be very, very slow. Very slow. FAS dropping down today along with the rest of the markets, but going nowhere. Look at this. Right back into what is very good and holding today as very, very good support from a daily perspective, too, coming back to retest this area. It's on right above whatever this. I could drop this line down ever so slightly to make it match a little better the 60-minute chart that we're watching. Still moves back until we get back below these areas here. I'm not real interested in any kind of a short position on FAS at this point. Back below about $20.50, then maybe we can talk about a short position, but still looking for breaks up and over 24 to give you a long, breaks below $20.50 for a short. Here you see FAZ wanting to hold up here. Now this in chart is really a high base. There's a good potential for us to maybe break through this area. But your trade is above that 1340, 1350 area before you want to even start thinking about a long trade. If we can get up and above maybe 1360, okay, now you've probably got an opportunity to trade it back into the $14-ish mark. And it's going to have to be kind of quick and tight for the next few days. You want to be very, very careful playing this thing back. You got to look at this as nothing more than just a pullback for the time being. So there you have it for the charts themselves. Not going anywhere over the last couple days, so not a whole lot has changed over the last couple days. We're still waiting for breaks below these areas on all of the charts, whether it's the NASDAQ or the SPX. We've got our lower levels in place. But the motion that we've seen so far has not been in any way conducive to a very bearish environment. So for those of you that might have been hoping for that major move down in the markets, you might want to reconsider that for the time being. It's going to take some news. Could come out tomorrow or Friday. But for the time being, based on the price action that we're seeing right now, bulls are still very, very much in charge. We'll wait for those lower breaks of support before we really start getting bearish on this market, and that is why it's so important to let the charts tell you what to do. Just let the charts tell you what to do. Keep your bias out of it. And I'll be back with you again tomorrow night, and we'll see what the markets bring us. Bye.